Are you ready for the stock market update? Excuse my voice. It's not because I've been screaming at the markets or anything like that, but it has been a pivotal week. And let me explain why. These are the valuations again, and like most of the year, based on price earnings ratios, which is just one measure of valuation, everything other than energy and banks diversified, everything else looks overvalued. These are in green because they're relatively undervalued. There are different ways of measuring these companies, of course. And none of this is to say that those are the best picks, because other things cause prices to move. Let's then look at how this week has gone. Well, the past week has resulted in actually energy and real estate doing well, but not those financial services companies, actually pretty much nothing else doing well. Another measure of valuation is price earnings growth ratio, which is share price relative to the growth in profits. And what you see again, energy undervalued, not so much the banks there, and that's about it. And arguably Tesla, but I don't like the volatility on that one. So again, energy remains in focus, certainly on the valuation part. Let's have a look at some details then. What do we see with the S&P 500? Well, that's been critical. See if we can break above this upward support line, this support line up there. And we haven't. What's actually happened is penetrated it, and then we've gone lower. We've moved lower. So this dream at the moment of a 21% return in a short space of time looks a little bit iffy. And we seem to be moving either in this direction or this. Option 1 would leave you with 14% negative returns. Option 2 with 31%. We'll probably go somewhere in between there. And what most of the banks are predicting is probably something like that. If you are thinking, should you be risk averse? Well, yes, the short term looks like, and that's the stochastic, it looks like it'll move low. So downward momentum, even though on the weekly, positive. That's all started to move sideways for a bit, and this might even start moving lower. So if you're risk averse, you'd wait another week. If you're risk neutral or risk loving, you'd ignore this because you would say, that's fine, I'm risk neutral, risk loving. Let's look at some of the bellwethers then. What about Apple? Well, that has now gone below that support. Not strong below, but it's certainly gone below, and the momentum on the monthly and on the weekly and over here looks like it might continue a bit lower. But given that these are oversold, it could always just easily go back. I mean, you know, these support lines are not written in stone, and you can sometimes get this penetration for a little bit. People sell out, panic, and then it goes back up. So let's just keep to this forecast for now for Apple. What about Microsoft? That's a lot better. And you can see, since I did the original forecast there, we're still on track for that, and the negative side doesn't look likely. It is in a downward channel, so it's going to meet some headwinds around here in any event, but probably the safest company I can think of, all other things considered. This is Amazon, and this is what it looks like when things do break below a lower channel support. And you can see, and this could happen to Apple. I do not know. You see, it could happen. And that's the risk, of course. So, you know, if you're risk averse, you'd stay out of Apple for now. But this is what we'd be looking at. If it can keep on this trend, then you're looking at a 50% return in a year. However, look what has happened. It might even go below that. We shall see. Pessimists will say, no, Amazon's going to go low. It's one of my long-term holdings, so I'm not going to worry or trade it in the short term as an investment. Meta, just showing this because that looks like where the bottom was. That's the run rate at the moment. If it sticks to that kind of a run rate, then in 2 years you get a 340% return. No way of knowing it will. Pretty speculative. If you're risk averse, you certainly wouldn't be in Meta given the 77% drop. But you might say, well, like I do, well, I'm holding this for many years because it's one of the few that I'm willing to hold for many years. So I don't worry about these drops. Now, Costco, one that I like, but again, fallen below that support, that long support that's been there for a while. But as we've seen before, it can do that for a while. So let's not panic stations yet, even though the momentum looks like it might even go lower. Let's not panic stations yet. And even if it were to stick to something like that, you're still getting a 22% return in a year. That's PayPal, gone back to its lows. And we look at this as a bellwether because, first of all, I didn't expect it to drop 77%. Neither did I expect Meta to drop so much. I mean, come on. Big companies losing 3/4 of their value. The market, it's either insane. Well, it's insane. Either insane because it made them rise so much, or insane because it's dropped them so low. But it does not make sense in such a short space of time that the market can't work out what the bloody value of a company is. Anyway, it's gone and done it again, and we're at all-time lows again. So whilst it looked promising here, that didn't last, and this is a warning shot for those who get a bit risk-loving when they see these bounce backs like they might see in Meta, that's what can happen. I suspect Meta will do the same. I think PayPal just paved the way for Meta in many ways. And I've drawn this line here as to what would happen if it went along that trend. Doesn't look like that at the moment. It's not a bad company. It's one that I hold for the long term. I don't mind holding it. Johnson & Johnson is where we are with it. Bull, base, and bear cases. Bear, -3. And so on and so forth. You might say, oh, it's a bit boring, that one, so you ignore it. Fine. Katerra, it's fallen below, and a lot of the energy stocks are. And there's been some talk from, I think, JP Morgan saying time to get out of energy stocks now. We've priced in too much. We've got the returns, and you can see that they're there. So if you're risk averse, yes, you would get out of the energy stocks. Now you take your profits and you run. If you're a bit more risk-loving, you might say, I'll take out half of it and let the other half run, but keep a close eye on Alpesh's weekly updates. Halliburton, still on track. It did that big fall, then climbed back again. And you can see the channel. You can see there's pretty good returns we're looking at. Marathon Oil, yep, did that big fall, but then climbed back again. So again, risk neutral, you'd wait if you're holding it already. And you can see what we're targeting there. 70% is not too bad, is it? 23% for Occidental, which I own, and Warren Buffett owns. Devon, again, you can see that sharp fall. It's gone below these lower projections, and you might say, "Ooh, too much risk for me. I'll get out now," because you're risk averse. But if you're risk neutral, risk loving, you probably hold on and wait a bit. Beware, you've been warned. This could fall lower, so you've been warned. Okay, Marathon Petroleum, well, that's still above this upward trend, and you can see in the past where it can fall and then bounce back up. So if you're risk neutral to loving, you'd say that's going to happen. If you're risk averse, of course, you're just going to cash anyway and everything. But that's a 60% return we're looking at over that period of time. Adobe I showed just because, again, good example of a company which is relatively good, but just dropped so much. And I just want it as an educational tool to show you, I don't own it, where it is. We're flattened out there and starting to rise, but the danger is could always fall back. And that's what's happening with a lot of these companies. They're not able to follow through and keep sustainable growth. Eli Lilly, one which comes in the news a lot, I own 40% up. And you can see what we're targeting there and what the expectations are and the range in which we expect it to stay. So if you print this out and look at it each week, you'll think, okay, it's on track, nothing to worry about. This was, I'll probably stop talking about this now because we've made a killing on this. I thought it was going to take 2 years to make those returns. We made it in no time. And, the private jet and the Bentley has been ordered as a result. United Health Group, this is where we are with that. That's what we're looking at the upper end and at the lower end. It's on the channel, like the company, own it. APA, another example of where things are. Have a look at my campaign for 1 million to teach 1 million people how to be better investors. We've got to, I think, easily 100,000 now. We're 10% of the way there. I might have to increase that to 10 million people. Lots of free resources, books, articles, daily updates, video updates. Oh my God, so much free content. Have a look there if you want to learn about investing, including work experience. Thank you all very much.